In today's episode, I'm going to teach you how it's possible to make over $100,000 in less than 3 hours of trading. I know it's possible because I just did it. My name is Ross Cameron. I am a full-time trader, and let me be the first to tell you that my results are not typical. I never expected when I first started trading that I would ever have a day where I could make over $100,000 in profit. But what I've come to learn is that once you have a track record of consistency, if you're comfortable taking risk, you will be able to increase your profitability. But one of the things that a lot of traders struggle with is they start with the goal of having that $100,000 day. And they don't see all the years of hard work that have to come before that can ever happen. I funded my first account with real money in 2001, more than 20 years ago. So I've been trading for a long time and I've seen a lot of ups and I've seen a lot of downs. And in order for me to make over $100,000 this morning, I had to take quite a bit of risk. But here's what I want to do. In today's episode, I actually put together a class for you. So I'm going to teach you a class. We're going to use today's trades as a case study. You can see I'm currently sitting up over $100,000. I had two stocks I traded. One of them contributed about 25% of the profit. The remaining 75% was on the other. And I had one stock that I lost on, which was about 2% of the total that I lost, which is not bad. Now, let's break it down. So in order for you to walk away from this class with some tips and tricks that you can implement in your own trading, what I want to do is I want to dissect these 3 hours and kind of break down the key moments. So the first moment that I want you to understand is number one, the stock selection criteria. So stock selection, how I was able to actually find these stocks in real time. Because one of the things that you'll learn the more you trade is that the majority of the time you're sitting here, you're not actually in trades. You're sitting, being patient, waiting for good quality setups. In fact, I spend a lot of my time each day talking myself out of taking trades. I'll see something and I say, no, I don't like that. No, I don't like that. I don't like that. I don't like that. I probably saw 24 stocks pop up on my scanners this morning and I said, nope, don't like them, don't like them. And then I saw one that I not only liked, I kind of loved. I was like, this is something I can get excited about. And so because that stock met the 5 criteria of stock selection that I'll share with you during this episode, I felt comfortable sizing up. So first we've got stock selection, and then we have the process of performing basic technical analysis. We'll just do TA, technical analysis, to look at the actual candlestick patterns. And I'm going to share with you one of my favorite entries that I took today. And then number 3, you have to be able to actually execute on the trade. And being able to execute on trade for a lot of people can be the hardest part. You see the stock, you know it looks good. You see a chart pattern, you know it looks good, but you can't pull the trigger. You're too nervous. So I'm going to share with you how I've been able to condition myself to take the amount of risk that I now take on any given trade. And let's be real. I had to take some risk to make the money I made today. Now, if you were comfortable taking that kind of risk, you might be able to have some big rewards too, but you wouldn't be comfortable taking that risk, hopefully, unless you had a track record of profitability that supported your accuracy, your profit loss ratio, and trading with that kind of share size. And again, that's what it takes all that time to build up. So by the end of this episode, I want you to walk away with a trading plan that you can implement today and that you can start trading today or tomorrow. And I want you to try to practice this for the next 4 weeks. If you can discipline yourself to trading in a simulator for the next 4 weeks and following this trading plan, here's what's going to happen. Number 1, you're going to find yourself trading less. The reason you're going to be trading less is because I'm going to have you focus on A+ setups, highest quality. Highest quality does mean you're going to cast a little bit of a tighter filter on what you're willing to trade, so you're going to get less opportunities, but higher quality, generally, for traders that have some experience and educated intuition, is going to be increasing your accuracy. That, in turn, increases your profit to loss ratio, which therefore increases your confidence. When you have a higher confidence, you'll feel comfortable trading with larger size. And that's how you go from doing $200 a day with 1,000 shares to doing $400 a day with 2,000 shares, scaling up. But you don't scale up until first you have that track record that's proving that you actually know what you're doing. So let's go ahead and make this full screen and we'll jump into this slide deck. So this is a case study of earning over $100,000 in less than 3 hours of trading for beginner and experienced traders alike. 350% gain in 30 minutes. That's the move that we saw on this stock. And what's interesting about this specific stock was that I actually talked myself out of trading it when it made its first move. So this first leg of the move right here, I did not trade at all. I didn't jump in it until it came back up for this second move higher. So why was that? Well, let's kind of go back to the beginning. When I sit down each day, I'm sitting down here at my desk. And in fact, even before I sit down, I pull up my scanners on my phone. And the reason I do that is because I want to see what stocks are moving during the early pre-market session. Now, the market opens at 4 a.m. right now, but most traders aren't able to begin trading until 7 a.m. because most broker-dealers don't allow trading before 7 a.m. I think it's because they don't want to hire people to do customer support that early. So whatever the reason is, most retail traders like you and I can't trade before 7. So I usually wake up, and when I get up 6:15, whatever the case is, 6:30, I'm looking at my phone and I'm checking the scanners to see which stocks are already moving higher from the earlier 4 a.m. to 6:30 part of pre-market, usually which is on lighter volume, but can give some indicator of what's going on. Now, this morning when I pulled up my scans and I pulled them up on my phone, what I noticed was that most of the stocks moving higher were lower price stocks. Now, I pulled them up using the Day Trade Dash software, which you guys see me using every single day while I'm trading. That's this software right here, and you can pull it up in a web browser and log in. So I look at the scans, and I'm checking to see what's on the top of the scan. Now, CNEY was one of the leaders. You can see it's a 60-cent stock, 144 million shares of volume. HTOO, that one's 59 cents, 212 million shares of volume. SRM, that's $1.14. What I know about my metrics, and which you probably know if you've been tuning into these episodes for a while, is that I don't usually make a lot of money on these lower price stocks. I find that when you have a cheaper stock, I just have to buy so many shares of it to make decent money that it's almost like, to me, not worth it. So if I look at my my metrics here, this is nearly $14 million of profit. And we look at price and volume, you'll see that although I will sometimes trade lower price stocks, I'm generally focusing on stocks above $2. So when I saw the lower price stocks on the scan this morning, I wasn't that interested. And so coming into 7 a.m., the top of the hour, I was kind of thinking to myself, I don't see anything that I like. So I'm probably just going to sit here and watch to see if we have anything that pops up with breaking news. And then that might give me my first trade. So I'm sitting here kind of just once again being patient. I've already talked myself out of taking a few trades. I said I don't like CNEY, I don't like HTOO, I don't like SRM, there were a couple others. I said, nope, I don't like them. They're too cheap. It's just not quite right. So I'm sitting here patiently, and then all of a sudden CYCN pops up. Now when CYCN first pops up, it pops up on my scanner. So if I jump on the slide deck here, step one for me is to monitor the scanners. These will show me which stocks are moving in real time. So CYCN hits two of my scanners at 7:24 a.m. and it's priced at about $3.18 right down here. Now, one of the things that kind of threw me off a little bit was the relative volume was pretty low. I usually prefer to trade stocks that have high relative volume, which means that even with only 350,000 shares in total volume today, that's much higher than the stock would normally have at this time of day. But in fact, this stock kind of first came on the scanners with lower relative volume. So as I hit the scanner, I was immediately kind of thrown off by that. So this is now kind of going to dissect what happens from the moment I see a stock hit the scanner. So the stock hits the scanner. I'm not really familiar with the ticker. It doesn't really remind me. I'm not like, oh, I know that stock. So I'm kind of like, which one is that? The price is fine. The volume is fine. The float is 1.03 million shares. So it's a low float stock. The relative volume is low, but it's already up 97%. Holy smokes. So the next step is to check the charts. So I pull up the stock and I can see it's moving higher. So what I do here in Day Trade Dash is I'll just click on the ticker right here. And when I click on it, because my charts are linked, they're linked with a color here, and these are linked over here. So each of the chart windows are linked together. I click it and it's linked to the news, and all of a sudden it populates. So as the chart populates, I'm looking at it and I'm thinking, all right, well, holy smokes, this thing just went from $2 to $2.60 to $2.80 to $2.90 to $3.20. It's already going to $3.20. I'm like, wow, this thing is strong. What's the catalyst? That's the first question I'm asking myself. Clearly the stock is moving. There's got to be news. So in this moment, what I do is I click on my my actual brokerage platform, and I type in the ticker CYCN. I press enter and the level 2 comes up. It's right now got 85 million shares of volume with a high a day of 844. So once the level 2 comes up, I'll start to kind of evaluate the spread, and I'll get into that a little bit more in a second. And so now I've got the level 2, the chart's loaded, and I'm trying to figure out what is the catalyst? What's driving the stock higher? And so the first thing I do is I check my news feed. But on this stock, my news feed was blank. We have this headline that came out at 10:09, but that was more of just mentioning that the stock is up. It's not it's not the catalyst. So I'm like, well, wait a second. I don't see a catalyst. The stock's up 97% in like 3 minutes. What's driving it higher? And so I type in the room, or I ask on my broadcast, I say, hey, chat, does anyone know why this thing is moving higher? And while people are, commenting or whatever, I pull up the SEC filings on the stock. And so I go over to this website called BAM SEC, and this website has all of the filings that the company has made, and they're sorted by date. There's different categories of the types of filings, but each one is sorted by date. So I just quickly look, and I see, well, the last one was a Form 4 filing on the 25th, but that was already a week ago. So I'm not seeing any fresh news. I'm not seeing anything here. So now I'm really kind of stumped. I can't quite understand why the stock is moving higher. And people in the chat room said, no, I don't see any news either. No, I don't see anything. Just, was making sure I wasn't missing something, but no one saw anything. So now I'm looking at the level 2, and the level 2 at the time, the spreads were pretty tight, and it already had 3.6 million shares of volume. The volume came in quick, but like I said, there wasn't a clear catalyst. And so I said, you know what? I can't jump in it right here. So what ended up happening was it did push higher. So we'll back this up here. We'll go back to whatever it was, 7:24 a.m. It ended up pushing higher right through this area here. I saw it when it was down at like 290 or whatever that was, just under 3. And it goes up to 320 right here. And it does a really nice pullback right here. And then look what happens. Boom. It goes all the way up to 390. I could have taken that trade easily. That is one of my favorite patterns. You know what that pattern's called? This pattern right here is called a micro pullback. And what I'm actually going to do for you guys is, and this is going to be especially for those of you guys who were not able to join us during our Black Friday sales, I'm going to give you a micro pullback PDF that you can download. You could download this PDF, you can print it out, and you can refer to it as you're looking at these stocks in real time. It's going to dissect how this pattern works. This is one of my favorite patterns. It's one of my favorite ways to buy a strong stock. Now, I elected not to buy, even though the pattern looked good, because I didn't understand the catalyst. I figured if there's not a clear reason it's going up, it's not going to hold these levels. I just can't trust it. And you know why I said that? Because not 5 minutes earlier, we had a stock, CANF, Can Fight Biopharma, that hit our scanners, and this company actually had news. It has news, it hits the scanner, and look what happens. It goes from $2 to $3, and then goes all the way back down to $1.90. And this company actually had news. So I'm thinking, if we have something that has news and it can't hold, how much should I trust something that has no news? I couldn't possibly trust it. So I say, no, I'm not gonna take the trade on it. Now, Now I want to back up for 1 second and just kind of reiterate, if we go back to CYCN, one of the things about CYCN that was interesting, the float is quite low. CANF has a float of 4.94 million shares. So it's about a 5 million share float on CANF, whereas CYCN has a 1 million share float. Why is float important? Let's get back onto the whiteboard. All right, so I'm going to share with you right now, and I'm actually going to give this to you as a PDF, my stock selection criteria PDF. You guys can download both of these. So that's download number 1, download number 2. Those will be pinned to the top of the comments and linked in the description. Free downloads. You guys can have them right now. Print them out and use them as much as you want. So this is, So this is what we're going to do. Stock selection. Sorry, sometimes I have a hard time writing while I'm talking. Stock selection. And number 1, we already talked about price. How I do better trading stocks generally between 2 and 20. That's kind of the window where I do the best. And within that window, I'm finding right now between 3 and 8 is kind of like the sweet spot. But it's kind of a bell curve. I mean, I'll trade a little bit on the lower end. I just end up getting more trades in the middle and then a little bit on the higher end. So that's kind of the middle area where I seem to be doing the best. All right, so then number 2, we've got a couple different criteria here. Number 4 and number 5. So number 1 is price. Number 2 is the percentage change on the day. And what I know is that the stock has to be up minimum 10% minimum in order for me to even consider trading it. And in fact, right now, if you looked at the entire stock market, you want to know how many stocks are up more than 10%? In the entire stock market, this is the scan right here. So we've got, let's see, 4, 8, 12. So I would say right now, total, probably 50 stocks, about 50 stocks in the entire stock market of more than, there's thousands and thousands and thousands of instruments that you could trade, including ETFs. It's probably, I think, 8, maybe 15,000, 8,000, then 15,000 if you include all the ETFs. So there are a lot that you could choose from. And of all of those, there's only about 50 that are up more than 10%. So if we right away say, I'm not going to trade anything unless it's up 10%, what we've kind of done, we're trying to find the needle in the haystack. Trying to find a stock that could go up 300% in one day is the needle in the haystack. And we got to have a system of how we're going to find it each day. So stocks don't go up 300% if they don't first go up 10%. So just by setting a minimum threshold of 10%, we've now eliminated 99% of all the stocks that we could be looking at each day. That's awesome. Okay, so we've done a good job there. We've narrowed it down, but we've still got 50 stocks to choose from. So what I have found is that typically the biggest percentage gainers are best. So the stocks that are up the most each day are the best. And you want to know why? It's because they're obvious. And, you know, I use these scanners, which help point out the biggest, most exciting stocks each day. But a lot of other brokers, they do the same thing. In fact, a lot of them actually email their clients and say, hey, these are the stocks that are up the most today. Check them out, check them out. Why do they do that? They want you to trade. The more you trade, the more money they make. The payment for order flow business model, it's commission free because they get paid for every share you trade by the institutional traders who are filling your orders. So it's a big money business. They want to encourage you to trade more. So they're going to put those stocks in front of you. So the most obvious stocks each day have a lot of eyes on them. And there's a lot of people putting them out there saying, hey, look at these, look at these, look at these. So for that reason, they get more attention. And no doubt, CYCN being up 263% right now is still one of the leading gainers in the entire, well, it is the number one leading gainer in the entire market. So up 10% is a minimum, and then the biggest percentage gainers are best. So typically, I'm going to be focusing on the top 5. The top 5 each day. So that means right now, these top 5, 1, 2, 3, 4, 5, are the ones that I would consider right in here. And anything below that, for the most part, I'm not going to be that interested in. With one exception, if the stock pops up right now 30% in like 2 minutes, because it just came out with breaking news, I could take a little bit of a speculation risk that there's a good chance it's going to go up 50, 60, 70% and become the most obvious stock because it's moving so quickly right now. If it can sustain that rate of change. Now that takes a little bit of intuition to know whether or not a stock has the potential to go from the 15th spot on the scan to, the top 5. But that's something that you'll get better at as you gain more experience. So number 2, it's got to be up at least 10% minimum, and it's got to be in the top 5. Number 3, I like to see that the relative volume is 5 times or higher. And this is the one that threw me off on CYCN. Well, plus the fact that it had no news. So the reason I like to see it, the relative volume is 5 times higher than average, is because that tells me that right now the stock is doing something exciting. It's doing something interesting. It's moving fast. People are focusing on it. A stock that has high above average volume, those are the days that we focus, because that high volume means it's liquid and you can get in and out easily with bigger positions. And usually that liquidity comes when you've got a lot of volatility and people are focusing on it. So CYCN actually had lower relative volume. And the reason was because it had a higher volume day just 4 sessions ago. Just 4 sessions ago, it had a day where it traded 30 million shares of volume. And so the fact that it had this day where it traded 30 million shares of volume back here, it went from $1.50 all the way up to $2.50. It's a lot of volume, but it came back down by the end of the day, it didn't completely die off, but anyway, so you've got this kind of higher volume day. And then there was a week before that, there was another higher volume day. So that all means that the average volume had to be that much higher in order for it to be 5 times above normal, because those previous high volume days increased the average. So then number 4 is we like to see if the stock has news. And this is preferred. Look, there are times like today where I'll trade a stock that has no news, but I really would prefer to see breaking news. So news, catalyst, that's important. That's the reason the stock is moving higher. And then number 4, coming back to why we jumped on the whiteboard, is float. So why is float important? Each of these represent demand. A stock between $3 and $8 is going to be in higher demand than a $300 stock. A stock up more than 10% is going to be in higher demand than a stock that's only up 1%. A stock with more relative volume clearly has more demand. So this is reflecting that it has the demand. A stock that has news is going to have demand. Demand, 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 demand. This represents supply. So we essentially have 4 potential elements of demand, and there's only 1 element of supply. And in fact, there's a couple more bonus criteria that create more demand that I'm not going to get into as much right now, but there are a number of other kind of specific types of stocks or specific types of catalysts that sort of amplify all of this. But let's just talk right now about these 4 characteristics of demand and this 1 characteristic of supply. So let's say, for instance, and again, you could download all that in the stock selection PDF. So let's say, for instance, you've got a stock with a 1 million share float. So the float is 1 million shares. The volume today is 10 million shares. And the percentage change today, let's just say, is up 100%. That's awesome. Look, hey, that's great. This is great. Now, what would happen? Let's just say if this stock has a 1 million share float, which means there's only 1 million shares available to trade. That's it. That's the total float from when the company did their IPO. There's only 1 million shares available to trade. So when the stock is up 100%, everyone that was holding the stock from yesterday, let's say they want to sell. They're like, holy smokes, I'm up 100% on this position. I want to sell. Can they all sell? Let's assume they're all going to want to sell. If you're in a stock and it goes up 100% in one day, you're going to want to sell, right? Most likely. Most of us would. So is there enough volume to allow you to sell? And in this case right now, you've got 10 million shares of volume, which means there's enough volume for everyone on the inside to sell. And we actually would characterize this as a float rotation of 10. The ratio is 10, which means everyone that's on the inside could have sold 10 times over. and yet the stock is still holding up. It's still up 100%. Let's invert these. Let's say you had a 10 million share float, but you only got 1 million shares of volume. If it was up 100%, these guys are not going to all sell. And in fact, it's probably not going to be able to go up 100%, just sort of based on the way we look at this here. If this went up 100% on 10 million shares of volume with a 1 million share float, this is not going to be able to go up 100% with a 10 million share float and only a tenth of the volume. In fact, it might only go up 10%. And so it's going to have a float rotation of 0.1. It's not even a float rotation of 1. It would need 10 million shares of volume just to do a float rotation of 1, which would allow everyone to get out if they wanted to get out. And so unfortunately what happens is that even if the stock had generally decent news down here and the price is fine, it's not going to get that big move. And if it doesn't get that big move, the relative volume is not going to come in. And it's because the supply is just too high to begin with. So now let's do another scenario. Let's say you've got a 1 million share float and then you get 85 million shares of volume, right? Now, all of a sudden, we're talking about, could we see an 850% move? And in fact, we have seen moves like that. Now, it's not going to be a direct calculation that if it's this, like this is not an equation where you can solve for percentage change because there are other variables. One of the big variables that we have with a lot of these lower price companies is whether or not the company needs to raise money. So we actually had an interesting example just yesterday where we had a stock that, we'll look at it. So this stock, CTNT, squeezed up yesterday, and I had a pretty good day yesterday. I was up about $35,000. This stock goes from about $2.50 all the way up to $6.50. It pulls back, it goes all the way up to $9 right here. So really nice move, and this definitely gave us some really nice, micro pullbacks. That's what I was trading yesterday as well. So as it was squeezing higher, it was like, this is awesome. Now the catalyst, the news event for this stock was that they were acquiring another company for a cash and stock equivalent of, it was like $1.5 million. It was a decent amount of money. So that costs them money to do that. So the thing I'm wondering is, what does their balance sheet look like? How can they afford to do this transaction? Because a lot of these lower price companies, they're not in the greatest of financial standings. And so I pulled up CTNT, I looked at the filings, and I went down and I realized, okay, how much cash do they have on hand? $5 million. Okay, so they've got $5 million bucks. And what are their earnings? In the last 3 months, they lost $2.3 million. Now, see, now that's a problem. They're losing money. They have cash, but they're going to run out of that cash because they're losing money. So now they're doing an acquisition, and I'm thinking, is this the type of company that's going to sell shares on the open market? Because if they want to raise money, well, there's a couple things they can do. They could take a loan, or they could just issue more shares. And this is what most of these companies do. GameStop issued, 130 million shares or something like that, and raised $4 billion this year. They just print shares. They issue shares and they sell them on the market. Now, the downside of this is that what does it mean if they issue an extra 2 million shares? What's that going to change? Well, that's going to change the float. It's going to increase the supply. And so increasing the supply is bad for a couple of reasons. Number one, if it was a 1 million share float right here, this was the whole float, and then they issue 5 million shares, 5 million new shares, they've now split the company. So everyone here is now holding only, 1/6 of the company, when initially their position was the whole thing. So diluting the value of the stock by printing more shares is bad for shareholders, but companies will do it to raise money. And so in this scenario here, you could have a stock that's got only a 1 million share float and it's got a lot of volume, but it doesn't go higher. And what we don't know is the company right now selling 10 million shares on the open market? Because then effectively the float's going up to 11 million. And that's changing our relationship here with supply and demand. And I don't know for sure if that's what happened with CTNT, but I speculated that maybe that was the reason that this kept selling off all day long. Now, in contrast, SNTI, This is another stock. And by the way, just on CTNT, how closely did this meet our criteria for the right type of stock to trade based on stock selection? So the price between $2 and $8 at its high and low today of that day. So that was fine. Its float, 388,000 shares. How much was it up? Like 300%. The relative volume was crazy high. It had a news catalyst. So this met all of our criteria. It was an A quality stock. So it was the right type of stock to apply the micro pullback strategy to. It met all 5 pillars and it met them very nicely. So then we had the previous day on Monday, SNTI. SNTI, this stock, this one went pretty crazy. So not only does it go from $3 to $6 pre-market, but at the open, it went higher, all the way to nearly $18 a share, up to 17 right there. So why did this one go so much higher, but CTNT dropped? Because in fact, this one actually had a higher float of 2.8 million shares. So it's got a higher float. That doesn't make sense. Well, the catalyst on this company, this is a biotech pharmaceutical company, and the catalyst was they had positive clinical trial results. And they received an infusion of something like $30 million from an institutional investor in the form of a private placement. So that institutional investor clearly liked the clinical trials and the company enough to give them $30 million. So now the company doesn't need to sell shares on the open market. Yes, the institutional trader now has shares equivalent to $30 million worth. So at some point in the future, they may turn around and sell them, but the transaction hasn't even settled. So the news is that it's happening. So right now, this is a stock with a 3 million share float and no need to raise more capital. And so we get this huge move. So it's very interesting how these dynamics of supply and demand play out in real time and vary based on the sort of individual circumstances of these companies. Okay, so now let's jump back into the slide deck here and look at CYCN. All right. So get myself all turned around here. So I'm getting excited. Well, you know, this is a lot of fun. I love trading and I love teaching. And I want to thank you guys for tuning in to this episode. I hope you're enjoying it so far. So we've got more to cover. So let's go ahead and grab that slide deck. So step number 5 is to wait for a good entry. So one of the things I said was that when CYCN first hit my scanners, I pulled up, it first hit my scanner, workflow, boom, hits the scanner. I'm doing my due diligence, checking the ticker. I'm pulling up the chart. It's moving fast, but what's the news catalyst? I can't find one. I look at the level 2, and when I look at the level 2, which is, this is a bigger version of the level 2, what I'm doing is I'm looking at the difference between the bid and the offer right here. And I'm actually going to just take a screenshot just so I can capture this. Let me let this fade and then I'll take a screenshot. So I'll just go like this and then I'll just paste this right here. So we'll just do this. That way I can annotate on a static level 2. All right, so CYCN right here. So what do I do when I pull up the level 2? Well, the first thing that I'm looking at is I'm trying to gauge, is this a thickly traded stock or is it a thinly traded stock? What does this mean? A thickly traded stock is a stock that has a lot of buyers and a lot of sellers. And typically thickly traded stocks don't move very quickly. Bank of America is thickly traded. And just by looking at the level 2 right here on Bank of America, we can see that this is thickly traded. Look at how many buyers are stacked on the bid and how many sellers are stacked on the offer. The bid is on the left and the offer is on the right. So this one's Bank of America right here. This is incredibly thickly traded. And what this means is that you have so many people that want to buy and sell this stock that this thing could go up. You could buy, if you wanted to buy 100,000 shares of this. Oh, sorry, my drawing tool is funny. If you wanted to buy 100,000 shares of this, you could buy 100,000 shares. You'd fill right here. You probably wouldn't get any slippage. In fact, it's one of the reasons it's so thickly traded is because high frequency trading algorithms are competing against each other to provide the market, to make the market for other investors that are moving in and out of positions, especially mutual funds and long-term investments. So they're scalping fractions of a penny on every single one of those trades that go through. And they're just, the stock becomes very thickly traded. The result is that this is a stock that will not go up 100% in one day, probably ever. It's just not going to happen. And that's great because this is a company that a lot of people are holding in, well, look, it'd be nice if it went up, but what can go up can go back down. So this is not volatile, and that's what makes us safe for long-term investment. That's why a lot of people like it. But that's not why, that's exactly why we don't like it. So I would prefer something that's more thinly traded. More thinly traded means that there's not as many buyers sitting on the bid, and there's also not as many sellers sitting on the offer. In other words, this could move pretty quickly from 620 up to 623, 624, 628, 630, 643, 680, and 705. That would be a nice move, a nice 10% move. And that's not unreasonable for these types of stocks. So when I look at the level 2, I'm looking at how many buyers are on the bid and how many sellers are on the ask. If there's more than 10 on either side, for the most part, I'm going to think this is pretty stacked. It's nice when it's stacked on the buy side, but usually they kind of go together. So this being just 1 or 2 or 3 orders on either side, that's totally fine. This is a more thinly traded stock. But it also is not unreasonable. It has a spread of 618 by 620. The spread is the difference between the bid and the offer. If you have a spread that's like 75 cents a share, that can be a little tricky. Yesterday we had a stock, it was ZJK, that had bigger spreads. Right now it's actually not that bad, but it did have bigger spreads yesterday. So, we don't want spreads to be 75 cents or $1 a share because then you can't really manage your risk. Usually when I'm buying, I buy at the ask price. So I buy at this price right here on the ask, and then I'm going to turn around and sell on the bid. So if I buy at the ask at 620 and I need to bail out, I would be selling at 618 for a 2-cent loss. But if I had a 50-cent spread, then I'm down 50 cents the second I get into the trade. And now it's harder to manage my risk on the trade. I don't have as good of risk to reward. Risk to reward is the relationship between what you're risking and what you stand to gain. And so in the case of a stock like this, I feel like I can manage my risk pretty well. All right, so I pull up the level 2 on it, and I had no issue with it. Even from the beginning, I had no issue with the level 2. The spreads were pretty tight. The volume was there, but initially I didn't take this first trade because I didn't understand what the catalyst was. I missed that move, which again was fine. And it was the right decision to sit it out after we'd seen that rejection on CANF. So it comes back up. I don't take that trade. And actually, I'll note that it gave us a kind of nasty false breakout on the 1-minute chart. And I sort of thought that it would. And I was like, guys, I'm not taking this trade because it doesn't have news. I don't think I can trust it. That false breakout was right here. So see how it pops up, it pulls back, and then rejection right there. Well, it didn't have really basis for going up. And so I think that candle was actually important in hindsight, because what that candle did was it gave shorts a good degree of confidence. They had just watched CANF flush, and they're like, this thing has no news. It's popping up, and now it's rejecting right here. Short this thing right here. Short it right here. What's the target? $2. Because that's what happened on CANF. Came all the way back down to 2. So it starts making its way back down to $3, then to $2.80, then to $2.60. And then right here, it kind of bases out. And it comes back up to the volume weighted average price. That's not uncommon. And it actually has a topping tail candle right here, which further gives shorts confidence because it came up to that level and then rejected back down. So if we look at that on the 10-second chart, I can pretty much guarantee you that a short seller would have added on that rejection. So that's going to be right here. So look at that heavy selling volume right there, 80,000 shares. So people are most likely shorting on that candle because you already have the rejection candle from right here. And then we have the break of VWAP right here where people add to it. And then the retest of VWAP, which usually shorts would add to for the second fade back down. But what happened on this was all of a sudden it rips up to 360. Wait a second. Uh-oh. Now this is getting a little confusing, and shorts are like, this doesn't make so much sense. Why is it going up? There's no news. That's fine. It's not going to go up that much higher, right? It's certainly not going to go up 50 cents higher. And surely it'll never go up $2 a share higher. Or will it? So that's the problem. You get overconfident, you get a bias, and then the market does something different. So all of a sudden this goes to 360 and it starts squeezing up to 380 right here. And I looked at it and I said, wait a second, what was our pre-market high? Our pre-market high was 389. So I said to myself, if this thing breaks 385 and 389 right here, we break the pre-market high, shorts are going to stop out. If it breaks, now it might hit resistance at 4, but if it breaks 4 and it can hold over that level, we might get a squeeze. A short squeeze. A short squeeze is when short sellers are forced to buy back the positions they sold short in the market. That creates an imbalance to the buy side. When you've got limited supply, that increase in demand can fuel and become a self-perpetuating move to the upside. So what ended up happening was, I took my first starter right here into this level. A little bit aggressive. I was anticipating the break through 89 and a break of 4. It goes up to 4. I take some profit off the table. It pulls back and it holds 389. Previous resistance becomes support. It was resistance back here. It was potential resistance back here, but we broke above it and now it's support. And when we held that level, I added back right here and sized up for the squeeze up to 450. It goes to 450. It goes straight up to $5. It pulls back and it dips down and I add now for the break of 5. It squeezes right here. A little touch and go for a second, but I hold through this consolidation and it rips up to 550. Micro pullback goes up to 6, up to 650, up to $7. Holy smokes. Unbelievable. Unbelievable trading. Now, Warrior Pro members, you're probably thinking, I want to see this trade. I want to go back and relive this trade. We're going to do that. Live trading archive will be available for Warrior Pro members. So you guys will be able to see my orders, where I bought, where I sold, precisely, the share size, everything else. That is part of the strategy that I teach Warrior Pro members. Now, I'm happy to, in summary, share with you guys on YouTube how I'm getting in and out. It's important for you to know, but we have paying members at Warrior Trading, and I want to make sure I reserve the highest level of content for them. So Warrior Pro members who are watching this right now, stay tuned tonight because I'll be uploading the live trading archive where we will dissect the entries and the exits and the share size as I rode this wave of momentum. So I was actually up over $100,000 in unrealized P&L as this hit $7. I had a position I was still holding from 584 and I was already up in profit that I'd locked up. But what happened is it dropped back down to 650 right here. It bounced back up to 7. It dips back down to about 630. And right through here, I gave back some profit. I gave back profit right in this area here. I thought that we were going to go up for another leg higher through 7. And I tried again here and I got stopped out. So I gave back about 20% of my profit on the stock, which honestly, I don't feel bad about because you're not going to have big green days without taking risk. So I gave back some profit on CYCN there. It drops down. And in the meantime, another stock popped up and I traded that. But then this curls back up, and I'll show you where was this. It curls back up right here. Unbelievable. I mean, this was just awesome. So I got the red to green move right here. We got this nice squeeze. I'm long going into the halt at $6. It resumes, it dips and rips, and I add going into the break of 7. It goes up to 760, hits a high of 780. I'm scaling out on the way up. Boom. That put me at $104,000 on the day, and then I gave back $2,000 off the top. So just some really solid trading. But again, it all goes back to what? Stock selection. You've got to be trading the right stocks. And the reason that I was confident taking the positions I was taking was because I've got this track record. I've been doing this for so long, and we've been in a really hot market where I feel comfortable stepping up to the plate and taking more risk. In this current market, it's paying off. Now, if we go back to the very beginning of the month, one of the things I said is I want you guys to start the month of December on a good note. And I want you to start by focusing on what? Highest quality stocks. Today's not a day where I traded 30 different stocks. I will on some days, but today I kept it focused. I traded just the highest quality stocks, and that by far was the winning move of the day. Because like I said, there were a lot of stocks that popped up on the scanners. I said, nope, I don't like that. Nope, I don't like that. Nope, I don't like that. I talked myself out of them. So stocks hitting the scanners right now, I could say, nope, the volume's not right. It's not moving high enough. It's not moving fast enough. So I'm not taking the trade. So really focusing on those highest quality setups and being patient to wait for the good entry. Now, it was very possible that I wasn't going to have any trades today because, yesterday was a solid green day. I was up 35,000 and I was comfortable with the fact that I might not take trades today. And then all of a sudden, boom, this setup, it starts to squeeze and I'm like, it's game time. By 7:43, it's hitting 4 of my scanners. So now I've got these different scanners that alert me to different types of setups. And it's hitting 4 of them at the same time. So now this thing is really exploding. And for me, it was kind of a no-brainer. Now, while that was happening, so CYCN, that was the best move of the day by far. But we had a couple other stocks that popped up, and one of them was FGL. Now, this one is kind of interesting. So FGL hits my scanners, and this one I talked myself out of as well on the first trade. FGL pops up right here. I see that it's a Vietnamese solar company, and they've got news out about a contract. It goes from $6 down to $4.80, back up to $6.20, and then back down to $5.30. So this thing is moving dollars a share. It's got a lot of range. And I said, I don't know, guys. It feels risky. When it came up to 6, I said, let's see if it can hold this level. It pulls back right here, and all of a sudden, it starts to pull away. And look at this squeeze. From 750 in one candle, this went from 750 all the way up to $11 a share. Now, I took my first trade right as it broke through this level here. So let me go back and grab that first trade. So I locked up $25,000 of profit on it. Now, let's see. So FGL, my first entry on this was a little on the high side. I didn't get in as low as I could have. So let's see. Let me back this up. All right, so first entry for me on FGL was $6.71, and I added at $7. So basically that was right in here. And the reason I didn't mean to draw it like that. The reason that I did that was because the way it popped up here to 650, dipped down, tapped 7, dipped down, and I added right here 670, added at 7. It goes up to 750. I took some profit off the table. I was like, hey, 50 cents a share, that's great. It dips down and it broke over 8, I added back. And now as it's squeezing higher, I'm like, holy smokes, I added 850, I added 9, and we get this squeeze all the way up to 11. I took some profit off the table. It came down, first candle bounces back up, and then it kind of did this slower, it came back up to 10, but it wasn't able to break back over. And I actually gave back some profit on this one too. I was up 30,000 on it, and I gave back 5 grand trying to time this trade for the curl back through the highs, but it didn't hold. And I don't know why. This one, I will say, had a 10 million share float. That float is higher. The volume was a little lighter, so the volume wasn't really able to support that move, but it ended up that the stock came all the way back down, all the way to the point of being down 30% in spite of having breaking news. So that's kind of confusing. You sort of scratch your head at that. And ZJK, this was the stock that made a really big move yesterday. This one did something kind of similar yesterday. Now, I actually lost $3,000 on this stock yesterday, which is sort of embarrassing because it made such an incredible move. But anyways, it goes from $8 all the way up to $48. And I got in too high. I was looking for, this is a 5-minute chart, but I was trading it right in this area on the 1 minute for the curl back up, and I stopped out on it. But it came all the way back down. It gave back pretty much all of its move as well. Float also a little higher, 22 million shares. So I don't know if that's the issue. I'm not totally sure. If we end up getting a headline where we find out the company sold shares, then we're like, oh, that's why that happened. But if that doesn't, if we don't get that headline, then we're just kind of left wondering why it didn't hold better. So as we look at CYCN right now, it's noontime, and overall, it's holding. It's up 266%. It's holding at the volume weighted average price. Is it going to give people more trades today? For me, and for a lot of traders who are trading this morning, I think we're pretty happy with how we did today. We're not going to overstay our welcome. We're good. Does it curl back up? It could. It's a little tricky because this was a big topping tail, and it's still down, $2 a share from that level. So it needs to kind of make its way back up higher. If it was holding, I generally say in like the top 20% of the range, that's where I get interested in a retest of the high a day. But it's a little on the weaker side right now. Volume is certainly declining, but it would be interesting to see what it looks like going into power hour from 3 p.m. to 4 p.m. and into after hours. Maybe, but again, you got to go back to the fact that, wait a second, there's no catalyst. There's no headline on it. So does it make sense? And I to me, it doesn't, but the market can be irrational longer than you can remain solvent. So don't get stubborn. If a stock is strong and it's showing strength, you got to focus on the technicals. You got to focus on the pattern. And that's really what I'm doing. Now, something I think is kind of interesting right now, if we look at my profits from 2017 through current, through this year, what you'll notice is that in 2017, I did about $335,000. 2018 was $500,000. 2019 was like 360. And then you know what I did in 2020 during the pandemic? This is crazy. $5 million. Record-setting year by far. 2021 came up to about 4 million. 2022 was about 1 million. And then 2023 last year was back down to about 300 grand. And I was wondering last year, this was 360, this was about 500, and this was 330. So when I came back down here to 300 last year, there was a part of me that was wondering, is this going to be is this the bottom, or is it going to go lower? Like, what's going on? And the issue was that in 2022, the Federal Reserve came in and jacked up interest rates. So they kind of manufactured a bit of an economic recession. Now, the recession has touched different people in different areas of the economy. Wealthy people, they haven't noticed because the markets kept relatively being strong. Although it dropped, it recovered quickly. But for people in other areas of the economic ladder, so to speak, it's been difficult. And for a lot of the small cap companies that I like to trade, it's been a very difficult environment for them because the cost of borrowing money is higher, which means they're more likely to sell shares on the market. Investors know that. So investors are more cautious to buy shares of small cap companies. So their prices haven't been as volatile. We haven't had as many big moves. And this was going through from 2022 to 2023. It was kind of waning. And then all of a sudden here in 2024, it started to pick back up. And there's no question that the election in November and the results of that have brought a new wave of momentum into the market. I think people are thinking about how strong the economy, how strong the stock market was during the Trump administration, his criticism over the Federal Reserve and what they've done with interest rates. And people are expecting that the market is going to be kind of rallying back up. And so if people are expecting it, they start behaving as though it's going to happen, which becomes that self-fulfilling prophecy where then it starts to happen. So this was 2023. All right. So 2023 for me was no doubt a tough year. And it's not that I wasn't showing up every single day, because I showed up every single day. We look at I can go to overview here. We can look at my profits and we'll do year calendar right here. And what you'll see is that through 2023, I showed up every single day. 2023, here's the calendar. Every day I showed up, rain or shine, I was here. But we just didn't have as much volatility and the market was softer. And so even when I would try to size up, there wasn't a lot of liquidity in the market. We would get moves, but they weren't as big. And so I had to resign myself to just taking base hits and being grateful for when I got the base hit and to not try to overstay my welcome. But this year, as momentum has started to pick back up, all of a sudden I've been like, all right, it's game time. So not including today's profit, not including the money I made today, let's just look at the last 90 days. So we'll go, I guess we got to do it manually, but that's fine. So we'll do December. So we'll just do whatever, September 1st. It's fine. So we're going to apply that. Oh, good. Come on. So we got to go to whatever, just to there. That's fine. So just in the last 90 days, $828,000 of profit right here, just in the last 90 days. So all of a sudden, we're getting a market that is really picking up. And if we look at where I'm at this year, so year to date, right now, again, not including today and not including yesterday, 1.5 million. So now I'm at 1.6. close to 1.7, including yesterday and today. Because yesterday was 35,000, Monday was I think 10,000, and then Friday, or then today is 102. So yeah, getting close to 1.7 million dollars. So in other words, I'm up 5 times what I made last year. And this is something that's kind of interesting with trading, because that's exactly what happened between 2019 and 2020. In those 2 years, all of a sudden, it was insane. From $367,000 in 2019 right here to, or what, 445,000 in gross, whatever, to all of a sudden $5 million right here. I mean, this is like unbelievable, that kind of jump to do 10 times the amount of trading. And it was the frequency of trading, the comfort taking bigger share size. I mean, everything was like dialed up. But that's what I'm seeing happening in the market right now. And it's not just with me, I'm seeing it across other traders. For our members at Warrior Trading, my students who have made over $1 million, I saw one of them last month had his personal record, biggest screen month. It was insane. I've seen just so many traders who have some experience. They already have a track record. So if you're brand new, the truth is the best time to have started to learn how to trade was 3 years ago or a couple years ago. So you'd be like all kind of ramped up for this leg higher that we're seeing in the market. The next best time is just to start learning now. Even if you don't fully capitalize on this current window, it's ebb and flow. You'll get the next one. So the time that you spend right now, I think, is going to pay dividends in the future. And right now, with the market picking back up and, it's sort of seeing like we've got a real tailwind, this is pretty exciting. So when we keep seeing these stocks that are trading on, what ends up being sometimes well over 100 million shares of volume, I mean, this is really liquid. You could buy, if you wanted to, it seems crazy, but if you wanted to buy, 300,000 shares of one of these stocks, goes up $3 a share, you're up 900 grand. There's people that are going to be out there doing it. Now that's a little bit more risk than I'm comfortable taking right now. But the only way you get comfortable taking that kind of risk is conditioning. You have to condition yourself to just keep stepping it up, keep stepping it up. So like all traders, I try to trade at the edge of my comfort zone. But during 2022 and 2023, I had to rein myself back in because the market was slower. And I saw other traders who refused to rein themselves in, and they ended up spending that time digging themselves a hole that they are now working to recover from. I didn't go red in 2022 or 2023. I made money. Not as much as I'm making right now, but I stayed green. And I kept my account kind of basically hovering at all-time highs, just inching a little further ahead, knowing that I just had to bide my time. I just had to be patient until we got this next wave. And now we're kind of at what feels like the beginning of this wave. And I'm trying to step up. I'm trying to take risk. I'm trying to, take the highest quality trades each day. So each morning when I'm running my broadcast, I'm kind of thinking in sort of 2 terms. One is I want to find like one really obvious trade each day that is the trade I would take if I was only doing 1 trade a day. Because I know a lot of beginner traders are doing like just one trade a day, or maybe 2 in the early phases of trading with real money, which is the right thing to do. So first I'm kind of like, what's the like best trade of the day? And then there's trades that are like, okay, this is higher risk, but I've got a cushion, so I'm going to take this risk. So I'm trying to kind of think of it as like, what are the like bread and butter? Like these are really good quality setups and I'm not too worried about the risk. And then, and take big size on those. And then on the ones that are a little bit riskier, just being cognizant of that and saying, this is a little bit of a riskier setup. I'm adding on something that's really high. So by saying it out loud, I'm putting it in my mind and sort of putting it out there like, I need to take smaller size on this because this is riskier. And look, I mean, trading is risky, but like anything else, it's a spectrum. There are trades you could take that are crazy risky, and then there's trades you could take that are less risky. So you choose sort of where you want to be on that spectrum, and that changes from day to day and from market to market. So this is what I want you guys to do. For those of you guys who have been tuning in here, number 1, I want you to download my micro pullback strategy and my stock selection PDF while they are still available. The links are pinned to the top of the comments and they'll be in the description, so you can download those 2 PDFs. Next, if you did not join us during the Black Friday sale, I would love for you to do a 2-week trial. You could do a 2-week trial at Warrior Trading for $20. That covers your market data. It doesn't even cover all of it, but it covers some of your market data costs. So you can have real-time access to the scanners, the charts, the news feed, and my live audio video broadcast, And you'll get a selection of classes from my Warrior Pro curriculum. So you can get a sense of what it's like being in the community, and you can learn some stuff over the next 2 weeks. So if you've got the time, you've got the availability, you should definitely do the 2-week trial. If you don't have the time to do that, but you're watching this recap and you just want to keep learning, you can download these 2 PDFs and you can check out a copy of my book, How to Day Trade the Plain Truth. You could buy a physical copy right here, or at the end of this episode, I'll give you a link where you can listen to this book, the audiobook read by yours truly right here on YouTube. So you can stream it while you're going around driving and doing some other stuff. And I've got a couple other episodes I recently uploaded. One, 27 years of trading knowledge condensed to a 3-hour-long course. There's a 3-hour-long master class right here on YouTube for free. And I have another episode about how to start day trading from zero. That's also about a 2.5-hour-long episode that you can check out. So there's lots of free content that I put out here for those of you guys that want to keep learning. But if you want to trade with me live every single day, you got to do that trial and you got to take the leap and become a Warrior Pro member. Now, I'm going to give you some recommended reading for those of you guys that do want to keep learning. I already talked about How to Day Trade the Plain Truth, but let me give you a couple more recommendations. So this right here is a book that I think is nice around this time of year. The Happiness Advantage, How a Positive Brain Fuels Success in Work and Life. Now, I know that some people are going to disagree with this. For me, mindset, and this is for me, but it's true for a lot of traders, mindset is so important. You can choose to look at the glass half full, or you could choose to look at it as half empty. But when you choose to look at it half full, you put yourself in a position of confidence. When you're in a position of scarcity, you start to get defensive in the way you trade. You start to get desperate. You start to get stressed. And that is not conducive to being a highly successful, high-performing trader. The traders who do the best have a high level of confidence. And there is a portion of it that is kind of like training your brain to think that way even before your metrics support it. So fake it up here until you make it. Get yourself in that headspace. So I encourage you guys to check out this book, The Happiness Advantage by Sean Acor. Another book that I always recommend, Thinking in Bets by Annie Duke. And she has another book that I liked as well called Quit by Andy Duke. I listen to these on audio tape. They keep me going. I think these are great books. And of course, you can listen to mine as well. So keep the learning going. Don't stop here. And hey, if you haven't already subscribed to the channel, you can always hit that subscribe button. All right, so I will see you guys for the next episode. And I'll remind you, as always, in case you didn't know, trading is risky. My results aren't typical. So please manage your risk and practice in the simulator before you put real money on the line. I'll see you for the next upload real soon.